Hello, everyone. My guest today is Daniel Ha. He's the CEO and co-founder of Disqus. Daniel studied computer science and engineering at UC Davis and interned at big companies before deciding to drop out of school to pursue the startup world. His company Disqus is the web's most ubiquitous discussion network. You've probably seen it at the bottom of your favorite blogs. They reach over 2 billion unique visitors every month and span nearly any topic or type of community imaginable. They're backed by Y Combinator, Union Square Ventures, Northbridge Venture Partners, Iris Capital, as well as many great angel investors. He also writes and speaks about digital media, online publishing, consumer products, and startups. Outside of startups, he spends his time on the racetrack. Daniel, are you ready to take us to the top?
I'm ready.
What kind of racetrack? We talking cars or horses or scooters or what?
Today it's cars. I'm working my way towards horses. We'll see where we go. But
you're pivoting.
Yeah.
That's funny. All right. I always love having people on who I'm a big fan of the product already. And it was funny. We were talking right before the show about the name. So it's Disqus, not Discus. For whatever reason, that's what I thought it was. But we see it all the time at the bottom of blogs. How did you come up with the idea and what year was it?
This is 10 years ago. 10 years ago, the original idea sort of came to me and my co-founder when we were working on a bunch of different ideas. The idea to do a startup came before anything else. We knew that we wanted to build software on the internet. We knew that it was sort of a special time where getting that was going easier and easier every day. And we started playing around, just building things and pushing them out there, first to friends and then to other people and seeing how they reacted to that. And the product for Disqus was maybe one of the first 5 things that we did. Initially, the idea was around building online communities, sort of online forum style. And we realized that a lot of the communities were coming out of blogs, websites that were very narrowly defined and very much focused on someone's passionate interests like cars and horses. And we built a product to embed right into the website, and it ostensibly sort of looked like comments. So that's where we started.
And how did you know you kind of had lightning in a bottle? What were you looking at metrics-wise where you said, okay, we're going to go all in on this one?
In retrospect, we didn't have any really good metrics besides how we felt about it day to day. And after the first few days, it felt like, hey, we're every single day, a few more people saying, I love this. Or they're saying, I hate this, but can you do this a little bit differently? But ultimately, we were making some sort of difference to one person every few hours, and the feedback kept rolling in, and it just felt good. And after a certain point, we started to measure a little bit, and it turns out that a lot of people were using it. That gave us enough confidence to actually start thinking about it as a product, not just a toy, and not just a product, but then a business.
Now, people that use this, because you have such a huge free user base, they might be going, wait, I didn't know they make money. I thought they were just a free tool. How do you guys make money?
So we make money through a bunch of different ways. And we stumble across probably every different way that a product like Disqus can make money. So we learned a ton. We make money primarily through advertising, because what we do is a publisher network. It makes it such that we have all of these page views and exposure to users. And Disqus inherently is free to use. Our free version is ad supported, and we'll run advertising against that. For the other folks who don't want the advertising, they can choose to pay for a premium version. Starts at $10 per month, so pretty affordable. And so the rest of our business is all around just building out better features that people can pay for.
Do people actually do that, though? I mean, people wouldn't know that you have the ad side of the business. And if they did figure it out, maybe they'd say, okay, fine, I'll pay $10 a month for it. But is it $10 a month model? Is that a significant part of your business or no?
So the $10 per month part is not a significant part of the business, but it kind of goes up a little bit higher. So it goes up to $1,000+ per month if you are a media company or enterprise style commercial business.
So give me an example. That brand, they love your product. They want to use it they don't want to give you their data. They don't want to give you their customers, their viewers' data. So they'll pay 10, 20, 30, 40 grand a month for that wall.
That's right. Yeah, we call it Disqus Plus. pay for that. There's other features that we offer as well. So Disqus sort of starts out as a common system user free, but the other parts of the product involve things that we call audience engagement features, ways for people to drive new traffic, ways for them to monetize traffic, manage user generated content on their page. So there's a number of features that we pile on top of the core platform, and those prices vary with it.
And so if you had to sum up, it sounds like you have a bunch of different things kind of always in the hopper, but if you looked at, your revenue as 100% pie, how many things, like how many different products make up more than 20% of that pie? Like, do you have 3 main things, 4 main things?
Yeah. So advertising and software are 2 businesses, and advertising makes up 80% of our business.
Oh, wow. Okay.
Yeah.
That's fascinating. So I just actually had Kurt on, I think Abrahamson of Share This, and it surprised me that his main model was exactly this. And then the social plugin that you see across many, many websites, but it was exactly this. I think he mentioned LiveRamp, like he would sell into these networks like this, and same model for you.
Yeah, very similar. We work with a number of these, either SSPs or DMPs, where they are looking to.
Can you spell out those acronyms just for my audience?
SSP, supply side platform, DMPs, data management platforms. These are companies who are trying to help other brands have alternatives outside of Facebook. And there's a duopoly in this world. It's either Facebook or Google who has ownership and access to data, and really has a big dominance over how media works online. So these companies crop up to essentially give these marketers different options and allows them to get more bang for their buck. And companies like Disqus, we end up aggregating a lot of user attention, or publishers as a whole, and we work with these platforms to extend their advertising reach or to extend their audience reach.
Now, what are you at today in terms of team size? And I know you've raised capital. How much have you raised?
We've raised less than 30 million, and this has been 10 years. We haven't raised in the last 2017. We haven't raised in about almost 4 years now, and team is under 100 people. I'm not sure if you caught the news, but we announced an acquisition of the company last week.
Oh, tell us about it. No, my research team did not catch that.
Yeah, so Disqus was just acquired by based in New York, and what Zeta does is essentially
Daniel, sorry, you cut out
marketing
right.
automation.
You cut out right there. Who acquired you?
Zeta, it's spelled Zeta, Zeta Global, company based out of New York, about 1,200, 1,300 people, and it's a marketing automation company. They build software for sort of top brands to reach audiences. And they do that through software. They do that through working with advertising and data partners. And really, they bought Disqus to extend all of those things. It's sort of interesting for us because it happened a few weeks back, and it's been very much business as usual for Disqus. We operate very independently from.
That's a good thing, right?
It's a very good thing. And ultimately, our goal is to have the resources and the backing of a larger company as we kind of drive forward. But in many ways, our brand, our culture, our product, the things that kind of make Disqus uniquely Disqus, those things will remain.
Now, on even though the advertising thing is about 80% of your revenue, actually, let's focus there. Do you sell into like hundreds or thousands of different customers there, or are there like 5 core customers that make up the majority of that for you?
So we act almost purely on the supply side, which means that we run the network and we sell that to the advertisers, which is the demand side of our market. So we don't focus very much on direct selling. We work programmatically with a number of different partners. So we work with maybe about 25 plus supply side platforms where they will sell into their own advertisers. And we will have software that takes all of that different advertising buys and places that in the right place across our entire network.
So those 25 different relationships make up 80% of your revenue. I imagine 1 or 2 of those relationships might make up a pretty good chunk of that 80%. Does that ever worry you? I mean, or is that not a concern? You lose one customer, oh my gosh, we have to reevaluate a bunch of stuff.
You cut out just at the very end of that. Could you repeat it?
Yeah. So you have 25 of these customers that you have relationships with. I imagine maybe one or two of those customers make up maybe a bigger chunk of the 80% of your total revenue. Do you ever worry about kind of managing the bigger fish? And if you lose one, how do you adjust?
For sure. And that's sort of why we took a programmatic approach in the sense that we wanted to create the most robust access to our network for advertisers to buy their placements for users. And that means that when we have a partner drop out or we have a partner that's not performing very well, we can fill that in very quickly with other partners in which they'll bid
I
very
see.
equally across the entire platform. Because we're not directly selling to a single advertiser, every single one of those 25 to 30 partners will have access to thousands of different advertisers, and frequently they will overlap across the other partners as well.
It's perfectly
For example,
competitive.
yeah, for example, one of those partners would be Google. We bid across our network as well.
And then can you give us a general sense of size, obviously pre-acquisition? I mean, were you call it above or below 50 million in annual revenue?
Are you talking about on the revenue side?
Yes.
So Disqus has been profitable. We are in the $20+ million annual mark.
Oh, that's great. Can we put a cap on that? Can we say between 20 and 40?
Yeah.
Okay, fair enough. And to the extent you're comfortable doing this, because it's still pretty fresh, Daniel, there's obviously rational reasons for an acquisition, a multiple and strategy, and is it a good home and all that. But there has to be an emotional angle to the art side of the deal. For you, what was the emotional aspect? Why decide to sell the company?
Yeah, I think the biggest thing for us is that we knew that Disqus is a 10-year-old business, and we have hit profitability over the last year, and we've hit cash flow positive over the last year as well. So over the last couple of years, we've kind of been on this mode of really getting to a operationally efficient business. But given the age of the company and given where we are in the market, we knew that for us to kind of make a huge step, we'd either need to raise a ton more capital or figure out, do we work with a partner to accelerate? And we knew that that meant an acquisition. So over the last few months, we've explored this pretty actively. We had a bunch of folks who were interested in working with us on that level, either as a full buyout or a strategic investment. And for a long time, over the last, I would say 3 years now, we've listened to those options and considered them, but it was not always the first thing that we wanted to go do. We liked the idea of being 100% independent. But more and more, it became clear to me that it would be the way to go if we really were to ramp up our vision and get to where we wanted to be. So it became a real thing in the last 6 months. And recently we did this deal, and that's exactly what that path has become, which is stay independent as an operational business, but really taking the resources from a corporation that allows us to reach a market that we couldn't have before.
Are they public? And if so, was any of the deal in stock?
The company's not public yet, but one of the reasons why we sold to Zeta is that they're on a path that we feel pretty comfortable about.
Yep, got it. So they're saying, "Hey, you want to get on the boat now? Look at where we're going. Look at where we're going. Come on, Daniel. Come on, pick us." And then you go, "Okay, I buy the story."
Yeah, and they're waving things in our face. Yeah,
that's awesome. Now, did they build other things in the deal, like earn out to retain top talent, or like how do you make sure the team stays together?
Yeah, I think the number one way is to really look at the structure of the deal. And for us, number one was, is it still Disqus, right? Are we still responsible for growing revenue, operating expenses, hiring, all those aspects that an independent company has control and visibility over? And that's been the way with Zeta. They haven't run this type of business before, but they do things that have very tight overlap into what we do. So we work with brands and they work with data partners, and Disqus feeds into that vision. But ultimately, our world of publishers and commenters and readers, that's not really their forte. So we're very much in full operations of that. And that means that we control the outcome.
And it's a new blue ocean for them, a new product experience, a new muscle they acquired. Interesting. Last question here before we wrap up. How do you value a company like Disqus before you sell? I mean, is it a pure SaaS play where it's a revenue multiple, or is it EBITDA? You mentioned many times that you're cash flow positive. How do you value it?
Yeah, you cut out quite a bit there, but ultimately you asked, how do you value a company like Disqus?
That's right, Daniel.
So that's a really good question. And for a long time, we struggle with that even when we're raising money, because you can look at Disqus in a couple different ways. You can look at it as a consumer facing sort of software company where we sold software to individuals, and we sold them at high volumes at low cost. You can look at it as a media business where it's all advertising based, or you can look at it as a platform technology type of business. And we've been valued across the entire spectrum at different chapters of the life of this company. And when we went out and started having those conversations on the strategic front, really the goal for us is to be valued in the right place for where we thought we were going to grow into. One of the challenges for Disqus for the last few years is that we were being valued not just through the acquisition market, but also through fundraising as a media business. And media businesses typically they'll have 1, maybe 2x multiple off their top.
Yeah,
line
Daniel,
revenue.
you can say it. If media businesses get shit multiples.
They get shit multiples. They're not. It's not the right quadrant you want to be in.
Yeah.
It's one of those things where we just kept working on framing it a little bit differently. Even though our margins were nowhere near a media business, we weren't doing the.
You were way higher, right?
Yeah, well, media business they'll do 15%, 25% margins.
You're talking gross, right?
Yeah, gross operating margins were in the 70+% range. So
more like a SaaS business.
We're very much like a SaaS business, given though we're structured. However, the way that our revenue comes in is very much like a media business. So we had the split model. We had was a bit of a hybrid. So it's about kind of finding the right buyer for that, because people will look at it differently. They'll say, well, once you come into my company, you're going to be a media business, or once you come on my business, it's software. So they'll look at that. They'll apply a strategic multiple, then they'll apply some sort of emotional multiple to that and see whether or not it kind of ticks off the right things for them.
Can we put? I assume was it public what you sold for?
There was some theorizing in the press, and that's more or less right.
Okay, who theorized the best, and what did they say?
I actually don't know. Theorized. I was actually talking about last week, so I'll let you do the research on that.
Okay, I'll have to go look it up. Just to make sure all the information or as much as possible is on the podcast. So, I mean, is it fair to say, the multiple was somewhere between a media exit at 2x and a SaaS exit of 5x on your top line revenue? Is that fair?
We got the multiple that we were working on for a long time. We were trying to avoid the media multiple. That wasn't it.
Okay, good. So it was higher than a 2x.
Absolutely.
Okay, good. That's. I was just trying to put a bottom on it. Upside, I'm sure you did great negotiation there. So good stuff, Daniel. Let's wrap up here with the famous 5. Number 1, what's your favorite business book?
Oh man, my favorite business book that I'll go back to is the one that I first read that really got me to drop out and embark on startups, which is Jessica Livingston's book, Founders at Work.
Number 2, say that one more time. The Founders what? Daniel, say that one more time. The Founders what?
Oh, Founders at Work by Jessica Livingston.
Number 2, is there a CEO you're following or studying right now?
No. For the first time in many years, there's no one I'm following, and I'm getting that mental space back.
That's good. Number 3, besides your own, what is your favorite online tool?
My favorite online tool right now is Slack.
Number 4, how many hours of sleep are you getting every night?
I've been sick for the last few days, so anywhere between 4 and 5 recently, but typically I'll get around 7.
Okay, around 7, that's pretty good. And situation, married, single, you have kids?
Girlfriend, not married, no kids.
No kids that you know of?
That's right.
Not married, no kids. And Daniel, how old are you?
I am 31 this year.
31. Okay, good stuff. And just to round this out, by the way, the theorizing in the press was around 90 million. We were doing research live here. My studio people are going, here's the number. So good stuff there, Daniel. Last question. Take us back 11 years. What do you wish your 20-year-old self knew?
Ah, man. My favorite lesson to myself is the thing that your mom tells you, which is to be yourself. And over the years, as you kind of work with so many bright folks with so many different ideas, and they're all doing great things, people have this need, this feeling to want to pretend a little bit, to want to position themselves a little bit differently, or second guess themselves on what the right thing to do with their career, or what the right thing to do with their business. And I think 10, 11 years ago, I would have said, make sure just focus on what you're good at, get help for things you're not good at, and go from there.
There you guys have it from Daniel. Just focus on what you're good at, get help on everything else. He founded the company back in 2007. One of my products I probably use on at least a daily basis online. Beautiful commenting, Disqus, again, launched in 2007. They now have less than 100 folks on their team, but they've got many different business models. They've worked on repositioning over the past 3-4 years to, one, get cash flow positive, and two, really position the business in a more favorable light to ultimately get what they wanted, which was to grow. And then they realized the best way to grow is to partner up with Zeta, who they just exited to for a reported $90 million-ish. They're doing over $20 million in revenue and work really with about 25 folks on the advertising side of their business, which makes up more than 80% of the total business. Daniel, thank you so much for taking us to the top.
Thank you so much.